Good evening, and welcome to this week's special presentation entitled Glamour Stocks. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to give you a presentation. Well, this market continues to move up even though it's looking toppy. Many of you have seen stocks continually making the news and move up and wonder, why didn't I get into that stock? Well, due to interest rates being so low, money goes where money grows. More money keeps entering the market, and many of these stocks that you're looking at are overvalued. Now, our mantra is to have you buy safe, undervalued stocks that are rising in price in a rising market. But what is one to do with these overvalued stocks? Well, I'm here to tell you that you can find overvalued stocks that have a high probability of going higher. Stocks that can be the best of breed even while being overvalued. Now, let me step back a second. Just because stocks are overvalued doesn't make it a bad stock. It just means that investors are willing to pay a premium to own the stock. The key to finding stocks with a high probability of rising is relative value. It's one of our key proprietary indicators that shows the stock's upside potential over the next 1 to 3 years. So this is a simple process. 1, you've got to know when to buy. So we're going to look at 3 different market timing calls to help you to know when to buy. Number 2, you need to know what to buy. This week we will look at a search called Glamour stocks, but a lot of these stocks are going to be expensive. You probably want to learn how to trade options for some of these expensive stocks to help limit or leverage your money. And thirdly, you need to know when to sell. So we'll look at possibly incorporating individual stops, but also when your market timing call goes down, that's a good time to get out of those stocks. But some of these stocks may still keep going up. So I'm going to tell you, you probably need to learn how to trade options for holding on to some of those stocks for longer plays. All right, let's get right into the software. From the home page, we're going to go to the Unisearch tool. From the Unisearch tool, we'll click, and the search that we're going to look at this week is found in Searches, Special Searches. Now, this was a presentation that I did several years ago called Glamour Stocks. Now, the whole purpose of Glamour Stocks is to look at stocks price split adjusted that's greater than the stock twice its value. So we're going to look at price of a stock that is trading more than 2 times its value. That's definitely an overvalued stock. But another something I want to look at, earnings per share have to be greater than 1. A lot of times you'll see overvalued stocks that don't have good earnings. I want to help to feel more confident in buying these overstocks or overvalued stocks that have a good earnings per share. Why? Because earnings is the engine that drives us stock price higher. Thirdly, these stocks, once they are found, will be sorted by our indicator, relative value. So the stocks that have the highest potential of going up will appear at the top of the list. So simply, I'm going to run the search. As I run the search as of today at 2 o'clock in the afternoon, Zoom is at the top of the list. Well, Zoom is a stock that a lot of people have been using during the pandemic. This stock has rocketed, enough so that the price is trading at $392 with a value of $98. Now, keep in mind, value is what we feel a stock's price is worth. Now, you look at this and go, well, if the stock's price is going up that much and you really want me to buy that stock? Well, value looks at things like earnings per share and earnings growth rate, amongst other things. When we look at value, this is what we feel the stock is currently worth. Now, a lot of people feel confident that the stock is going to continue to go up, so they are putting more money behind the stock, outpacing what the value is. This means that people are willing to pay a premium to own the stock. But now let's look at relative value. Relative value is at 1.59 on a scale between 0 and 2. Let me move this over a second. 1.59 on a scale between 0 and 2. Let's dive a little deeper into RV. We're going to right-click on the stock, and I'm going to pull up a full stock analysis report. This is where you can get a definition of every indicator that we have. Let's go down to relative value. RV is an indicator of a long-term price appreciation potential. This indicator is far superior to a simple comparison of price and value because it is computed from an analysis of projected price appreciation 3 years out. So let me explain that to you again. RV looks at a stock's long-term price appreciation potential, and we compare it to an alternative investment in a AAA corporate bond. What does that mean? Well, when you buy a bond, after it matures, you get all of your money back with a small interest. It's a pretty safe investment. What relative value will do is show you, does the stock have the upside potential to outpace that AAA corporate bond? With a relative value of 1.59, what we're saying is that this stock should outperform that AAA corporate bond by 59% over the next 1 to 3 years. Helps you make a decision. Do you want to put your money in that AAA corporate bond or put your money into this stock? Long-term upside potential 1 to 3 years out. All right, so I wanted to give you a deeper understanding of how important relative value is in this presentation. So I'm going to close that. Zoom is at the top with a relative value of 1.59. Tesla. This is a stock that we've been talking about on Trending Thursday a lot on our YouTube channel every Thursday at 2 p.m. Etsy, Enphase. These are all names that you know. But a lot of you will stay away from them because you say, man, these stocks are too expensive, number one. Or number two, they are way overvalued. But we've now put some features involved in this to help you to say that maybe these stocks do have some upside potential and should still do well. All right, and that relative value indicator is smart enough to say that we want the ones only with relative values above 1 or sorted by that indicator of relative value. All right, let's put this to the test. That's running it today. These are the stocks. And you know something, would you buy today? Only if the stock's price is going up. You know, with a toppy market, only buy on up days and if the stock's price is going up. Today doesn't look like it's an up day, and it doesn't. All of the major indices are down. So even though these are good stocks from an overvalued perspective to take a look at, you only want to do it on an up day. All right. Keeping that in mind, let's go out and put some market timing behind this, all right? We're going to go to the graphs. We're going to bring up the market timing graph. And I'm going to look at, let's put this onto the MTI layout. And I'm going to put some market timing behind this. Going to start off with the confirmed calls first. And I'm going to put this on a 3-month graph. The last confirmed up call, the slowest, most conservative market timing call we have, the last confirmed up call happened on 11/10 of 2020. Let's go see what this search found on 11/10 of 2020 and get a feel of what the stocks did from that time until now. Beautiful opportunity to make money in the market. Let's go back to the Unisearch tool. Let's change the date back to that confirmed up call, which was on 11/10 of 2020. I'm going to run the search so it finds the stocks, Glamour stocks, that were the top 10 as of that date. Here they are. Zoom is there. Tesla, a lot of the same stocks are there. Think about it. Way back when, back in November, these are the same stocks, and look at what they're doing now, still appearing in the list, right? Let's do a quick test of the top 10. From 11/10, we'll do a quick test of the top 10 up until right now, 1:15. How about this? 8 winners, 2 losers. We up 12.73%. We pretty much did almost twice what the market did. And this is looking at the SPX. Almost twice what the market did on stocks that were overvalued. Now, think about this. Let's say you took advantage of this. Tesla is up 104%. Well, that's the biggest part of this 12.73%. What do you do? That question has been coming up a lot. What do I do when I'm up this much? Well, you need to have a profit target. If you are willing to take 30, 40, 50% and make that and then try to do it again, that's fine. Or better yet, let the stock run, use individual stops. Use maybe a trailing 10 and a trailing 7. Use one of the VectorVest stops to get you out of it as well. All right, but 104%, if you're up that much, Don't worry, use stops that fit right for you. ACMR up almost 14% over that time period. We did have 2 stocks that went against us. Now, when we look at a quick test, it doesn't incorporate any stops. It's just raw data from point A to point B. Well, let's say you had that trailing 7% stop. Maybe Kinsel wouldn't be in here as a 10% loss, and maybe BIPC would still be okay in your portfolio if you purchased all 10 stocks. But overall, raw data outperformed the SPX almost 2-to-1. All right, that was the slowest, most conservative timing signal. Let's go back to the market timing graph. Let's speed it up a little bit. Let's bring on the DEW. That's our good middle-of-the-road market timing signal, utilizing the D for detrended price oscillator, E for envelopes, and W for a 30-day weighted moving average. We talk about it every night in the Daily Color Guard report. What was the date that we got there? 11/3 of 2020. All right, let's do it again. Let's go to the Unisearch tool using the DEW as a way to get in. Let's go change to 11/3 of 2020. We'll run the search. These are the stocks that were found. Look at this. Still different, some different stocks, but for the most part, a lot of the same stocks are in here. Why is that? Because these are overvalued stocks that have high relative value. They show time and time again as I run these through different opportunities that they have a good opportunity to make money. Let's do a quick test of the top 10 from 11/3 until right now, 19.74%. Again, no stops in here, right? How about Tesla? Again, up 97%. mRNA, a stock that we've talked about in Trending Thursday countless amounts of time, 88%. BIPC up 14%. Now, there are a couple of stocks. How about Zoom in this one, down 13%? Utilizing individual stops would be a good way to make sure that you don't take a full 13% loss on this. And guess what? That number down at the bottom would be higher, still outpacing the S&P. Now, the primary wave, which could be the next call that we talked about, happened on the same date, so we would have the same results. Well, let's look at one other market timing call. We'll go to the green light buyer when we get a green light in the color guard pricing column. How about that one initiated a call on 11/5 of 2020. All right, let's go back to the Unisearch. Change to 11/5. Folks, this is 4 different market timing calls that we're doing here. 11/5, run it, look at the same stocks. Some other stocks are in here, but for the main course, a lot of the same stocks keep coming up over and over and over again because they meet the criteria of having positive earnings per share, and we're sorting them by that key indicator, relative value. Let's do a quick test of the top 10. Wow, look at that. 5 winners, 5 losers. Even the losers, if you were using a 10% stop, you'd still be okay in these stocks. Zoom, on the other hand, you could see that in all of the tests, Zoom got hit the most, but that's okay because if you have your stops in place, you will have gotten out of Zoom at a much earlier price, thus raising this total average even higher. But how about this? A lot of these overvalued stocks with a positive earnings per share sorted by relative value have a great opportunity to give you double-digit gains. If you could take some of this time and time again, would you be a happy individual? Now, I'm not telling you to use this in all of your retirement. Not at all. And I'm not trying to change your mind from the idea of buying safe, undervalued stocks that are rising in price in a rising market. But I do want to bring to your attention a lot of these overvalued stocks that are making the news, that are rising, giving you the opportunity to take advantage of some of those along with other stocks that you're currently getting into. This is another way to put money into your account. These are stocks that you would normally turn away from, but we're going to show you by utilizing Glamour stocks an opportunity to increase your comfortability and investing in some of these stocks. So, folks, this was a very straightforward presentation utilizing your when to buy. Use the market timing signal that fits right for you. Your what to buy, using your Glamour stocks. Your when to sell, looking at individual stops that fit you. And another thing, when you get a down call in any of your market timing calls, take the wins off the table. Take the wins off the table and wait for the next opportunity to invest in some Glamour stocks. Again, I'm not telling you to take your full portfolio and go straight to Glamour stocks. We still want you to maintain the ideology of buying safe, undervalued stocks that are rising in price in a rising market. But if you want to take a look at some of these stocks that are moving and see which ones are good for you to take advantage of and still make some money, that's the purpose of this presentation. So with that, folks, I want to say thank you for joining me this evening. All right. And if you have any questions, give us a call, but we will hold a Q&A session on Monday at 2 p.m. to answer any of your questions that you have. So if you've got the questions, that is the place to get them answered. With that, folks, I want to say have a wonderful weekend.
Yeah.